Hi Morphers, it's Katrina from Studio M, and here's today's daily decision. Small business owners, let's talk saving and investing, two key tools for your financial success. The decision isn't really whether you need to save or invest, but the decision is how to structure the plan. Saving is stashing cash to be used to cover unexpected hiccups like equipment breakdowns or slow sales seasons. Investing puts money into assets like stocks, bonds, or real estate to grow your equity. This is for long term goals, like expanding your business or opening a new location. I hear you saying, thanks, Katrina, but I already know that. What I want you to tell me is what's a potential process to save and invest. Hang on, we're getting there. Let's say you could use a revenue-based calculation. So for every dollar in revenue, how much should you set aside to save and invest? Is that a percentage like 2% or 8% of revenue generated? Possibly. If you have a product-based business like a home goods store, managing that could be challenging because revenue is generated daily. For ease of calculation, consider applying that percentage that you've chosen to the weekly tally. What about a service-based business? Perhaps the savings amount is based on a revenue range. Hear me clearly. For instance, if you make between 750 to 1,500 on a project, then you may save 250. Or you invest 500 for revenue generated from 1,500 to 3,000. Based on the invoice, you can easily determine the amount to set aside. Keep in mind the pricing structure and the profit margins you want to maintain. All of this works together. Treat the savings like an expense in your calculation. If it isn't a pre-planned activity, you are less likely to follow through. Then you should determine what are appropriate reasons to use funds from the savings account and the protocols for approvals by you as the owner and your accounting department, which really could be you at this point. A new desk chair or LED desk lamp may not make the cut, but a burst pipe or a new tire for the company truck could be the exact reason that you would use that account if that cost can't comfortably be covered by your operating account. Another reason to consult your accounting department. Investment accounts, really, they have their own methods to help you make those decisions. Things like the time needed for maturity without forfeiting anticipated growth, like a CD, or taxes to be paid for early withdrawal. Balance both. Save for short-term goals, invest for growth. If you need some help, let's build your financial plan together. I'm Katrina from Studio N. Until we meet, keep working on the change.